Alright, picture this. You've got some hard-earned cash, and you're thinking, how do I make this money work for me? Are you leaning towards the sleek, modern appeal of an app like Acorns, or does the tried-and-true path of traditional investing feel more reliable? That's the million-dollar question, isn't it? In a world saturated with financial jargon and countless investment options, it's easy to feel overwhelmed. On one side, you have the burgeoning fintech industry, epitomized by micro-investing apps like Acorns, promising simplicity, automation, and accessibility. On the other, you have the established, often more complex, world of traditional investing, think brokerage accounts, mutual funds, and individual stocks. Both promise a brighter financial future, but they go about it in vastly different ways. So, which one is truly the best fit for you? That's what we're diving into today. We're going to break down Acorns and traditional investing, stripping away the complexity to reveal their core mechanics, their strengths, their weaknesses, and ultimately, who each of them is designed for. This isn't about telling you which one is inherently better in a universal sense, because the truth is, the best option depends entirely on your individual financial goals, your risk tolerance, and your comfort level with managing your investments. Let's start with Acorns. Imagine a digital piggy bank that automatically scoops up your spare change and invests it. That's the essence of Acorns. Their flagship feature, roundups, links to your debit or credit cards and rounds up your purchases to the nearest dollar, investing the difference. Buy something for $4.50, and 50 cents gets invested. It's brilliant in its simplicity, making investing feel almost effortless and frictionless. Beyond roundups, Acorns offers recurring investments. You can set up daily, weekly, or monthly contributions, and even found money, where participating brands invest a percentage of your purchases back into your Acorns account. This set-it-and-forget-it approach is incredibly appealing, especially for those new to investing or who struggle with saving consistently. The idea is to make investing so easy and automatic that you don't even notice you're doing it. Acorns invests your money into a diversified portfolio of exchange-traded funds, ETFs. When you sign up, you answer a few questions about your risk tolerance and financial goals, and Acorns recommends one of 5 portfolio options, ranging from conservative to aggressive. These portfolios are globally diversified, meaning your money is spread across different asset classes like stocks and bonds, and across various industries and countries. This diversification is a key principle of smart investing, helping to mitigate risk. The fees for Acorns are relatively straightforward, a monthly subscription fee, typically ranging from $3 to $9, depending on the tier of service you choose, Acorns Personal, Acorns Later for Retirement, or Acorns Family for custodial accounts. For smaller account balances, these fees can represent a significant percentage of your invested capital. For example, if you have $100 invested and are paying $3 a month, that's a 3% annual fee. However, as your balance grows, the percentage impact of the fee decreases. Now, let's pivot to traditional investing. When we talk about traditional investing, we're generally referring to opening a brokerage account with a financial institution, think Charles Schwab, Fidelity, Vanguard, or even many online platforms like E-Trade or Robinhood. With a traditional brokerage account, you have direct control over your investment choices. You can buy individual stocks, bonds, mutual funds, ETFs, options, and more. The world is your oyster, financially speaking. The learning curve for traditional investing can be steeper. You're responsible for researching potential investments, understanding their risk profiles, and making your own buy and sell decisions. This requires a level of financial literacy and commitment that Acorns aims to bypass. However, the potential for customization and control is immense. If you believe strongly in a particular company, you can invest directly in its stock. If you want to build a highly tailored portfolio that reflects your unique values or economic outlook, you have that freedom. Fees in traditional investing are more varied. Many brokerage firms now offer commission-free trading for stocks and ETFs, which has significantly lowered the barrier to entry. However, mutual funds often have expense ratios, annual fees for managing the fund, and sometimes sales loads, commissions paid when you buy or sell shares. Advisory fees can also come into play if you work with a financial advisor who manages your portfolio for you, typically charged as a percentage of your assets under management. Let's do a side-by-side comparison, highlighting the key differences. Simplicity versus control. Acorns is the epitome of simplicity. It automates the entire investment process, from saving to portfolio selection. It's designed for those who want to invest without having to think too much about it. Traditional investing offers unparalleled control. You choose what to invest in, when to buy and sell, and how to allocate your assets. This control comes with the responsibility of educating yourself and making informed decisions. Automation versus active management. Acorns is almost entirely automated. Your contributions are recurring, and your portfolio is rebalanced automatically. You are essentially a passive investor. Traditional investing can be passive, e.g., investing in broad market index funds and leaving them, or active, e.g., frequently buying and selling individual stocks. The choice is yours. Accessibility versus customization. Acorns makes investing incredibly accessible, even with small amounts of money. The roundup feature is a testament to this, making every spare cent an investment opportunity. However, its customization options are limited to choosing one of 5 pre-built portfolios. Traditional investing, while potentially requiring larger initial investments for some instruments, offers vast customization, allowing you to build a portfolio exactly to your specifications. Fee structure. Acorns charges a fixed monthly fee, which can be a higher percentage for smaller balances but becomes less significant as your portfolio grows. Traditional investing often features commission-free trading for stocks and ETFs, but mutual funds have expense ratios, and financial advisors charge asset-based fees. The best fee structure depends on your investment amount and how you choose to invest. Educational aspect. Acorns provides some educational content within its app, but its core appeal is that you don't need extensive financial knowledge to use it. Traditional investing, particularly if you're managing your own portfolio, inherently encourages and often necessitates a deeper dive into financial education. You learn by doing, researching, and understanding market dynamics. With that said, thanks for watching, and until next time.